Hello and welcome to my video. This is Dr. Sunil Bapupadam, Assistant Professor and Head of the Department of Accountancy, NGHR and DK Marathi College, Chembur, Mumbai. In this video, we are going to learn how to solve a question or sum on company final accounts. So let us see a company final account. Let me tell you friends, on a company final account, there can be three types of sums asked in a question in exam. The first type where only profit and loss account needed to prepare. Second one where only balance sheet can be asked. And third where both can be asked, profit and loss account as well as balance sheet. But today we are going to solve such sum where only profit and loss account is to be prepared. So a key to success is what? When you are solving sum, read it carefully and work accordingly. In excitement, what happens? The question requirement is something else and we give answer of something else. Hence, keep a cool and read the sum carefully. So let us read the sum. The following is an extract of a trial balance of Sunny Limited as on 31st March 2019. The trial balance is given of several items starting with the sales, opening stock, raw material, opening stock of finished goods, and so on. And the last item is sundry expenses. At the end of a trial balance, they are given just additional information consisting. The first one is closing stock of raw material uh, and finished goods was rupees 10 lakh and 12 lakh respectively. Second adjustment says outstanding salary and wages rupees 1 lakh. Sundry income receivable was rupees 50,000. Rupees 50,000 to be provided for bad and doubtful debts. Prepaid advertisement expenses were rupees 40,000. Make provision for income tax rupees 4 lakh. Raw material worth rupees 30,000 destroyed by fire. Goods were not insured. Prepare statement of profit and loss account for the year ended 31st March 2019 as per the provision of a Company Act. So friends, when you read the question carefully, possibility reading at once you may not able to understand. Don't mind to spare a few more minutes and read it carefully and understand what is the requirement and prepare. So in this question they have asked to prepare profit and loss account. Let us draw profit and loss account first. So profit and loss account, the format is given in a Company Act, amended Company Act 2013 and Schedule 3. So check out the format, particulars, note number, amount and amount. So this is what a format we will be preparing, and this will be supplemented by notes. So draw notes to accounts having four columns. Column number one is a note number, second one is particular, third one is amount, fourth one also amount, these two inner and outer amount formats. So we are going to profit and loss account, to prepare profit and loss account and notes to profit and loss account. In an earlier stage, means while you was preparing final accounts of a sole trader or partnership firm, the format wasn't that much stringent or strict. You can charge some items here and there. I mean to say that asset side, asset has to be charged, but there is no sequence as specific is required, similar to the liability. But in a company final account, the sequence is very much fixed. Hence, you cannot change it. So in such a case, what we'll do, we will write down the items. We will first evaluate the items and jot down where to be charged this item in a profit and loss account. So let us do it. The first item is sales. Sales. First item is sales, and the sales will charge to revenue from operation. I mentioned there RO. RO stands for revenue from operation. Opening stock of raw material will charge to CMCs. What it means? Cost of material consumed. Cost of material consumed is the second item of a profit and loss account. Then opening stock of a finished goods, CI. CI stands for change in inventory. The purchase of raw material, the cost of material consumed. It will go. Purchase return also goes to the cost of material consumed. Sales return is a revenue from operation. It goes. Dividend received goes to the operating income. OI stands for operating income. Sundry income also part of operating income. Hence OI. Freight on raw material, it's a part of cost of material consumed. Salary and wages is employee benefit expenses. That's why we are written there EBE, employee benefit expenses. Bonus to employee, also the similar employee benefit expenses. Director's remuneration is other income. Depreciation on plant and machinery, depreciation and amortization expenses. Same one for furniture and motor vehicle. Interest on loan from bank is a financial charges. Repairs and maintenance expenses is other expenses. Insurance premium on office premises also other expenses. Electricity charges also other expenses. Rent, rates and taxes also other expenses. Audit fee also part of other expenses. Advertisement expenses also other expenses. Sundry expenses also charged to the other expenses. So we have finished the trial balance. Let us see the adjustments. Adjustment normally has a two effects, but remember friends, we are solving only profit and loss account. Hence you will have to give only one aspect. So the first adjustment says that closing stock of raw material and finished goods was rupees 10 lakh and 12 lakh. It's a closing stock. It will charge to material consumed for raw material and a closing stock change in inventory. So cost of material consumed and the change in inventory. That's what the two effect will be given. So the next adjustment says that outstanding salary and wages, this will charge to the employee benefit expenses. No second effect to the balance sheet because we are not preparing. It goes to the balance sheet, but we are not preparing balance sheet, hence it won't come. The third adjustment says sundry income receivable outstanding goes to the other income. So next item is of rupees 50,000 to be provided for bad and doubtful debts. It goes to the other expenses. Next item is prepaid advertisement expenses. It is other expenses. Added to advertisement expenses. Make a provision for income tax that goes to the profit after tax. That's item we will charge in a profit and loss account. Raw material worth rupees 30,000 destroyed by fire was not insured. This has a two effect because insurance was not taken. If it is insured, some claim might have been received from the insurance company. Not necessarily, but generally the adjustment you will come across where insurance goods lost by fire, which was partly fully insured and partly claimed. So in this case, the goods lost by fire no wasn't insured, but fully lost. So the 30,000 will be lost, will be charged to cost of material consumed, and the actual loss of 30,000 will be charged to profit and loss account itself under the head of other expenses. So we have jotted down all the items where to charge and how to charge. Now we will follow these item wise of profit and loss account. Let's see the profit and loss account. Profit and loss account first item is revenue, under which we write as a revenue from operation as a working note number 1. So let us prepare working note number 1. Working note number 1. So working note number 1 is revenue from operation. So let us find out what comes in a revenue operation, which we have already mentioned. See there, sales, revenue from operation, RO, sales return is a part of it, revenue from operation. There is no further item as such RO. Hence, these two items will come, sales and sales return. So let us prepare note number 1, sales. What is the amount of sales we comes here? 2 lakh. See there, sales goes to the sales revenue from operation, that comes to the note here. Amount is 2 crore 40 lakh and sales return is 40 lakh. So the net sales, it is 2 crore. That's working note number 1. Net sales is 2 crore. That goes to the profit and loss account. Amount of net revenue from operation is 2 crores. So next item for profit and loss account, other income. That working note number 2 will be prepared. So let us prepare working note number 2. It's a other income. Let us find out what item from trial balance comes to the other income. OI. This is what a dividend received, sundry income, OI. The OI, there is no further item OI, but in adjustment we have one item, that sundry income is receivable. So sundry income will be added, this OI, other income. So let us take care. First item with other income here is what a dividend received, that will be taken care. Then sundry, go to the working note number, it comes here, dividend received 80,000. Then here sundry income and the outstanding sundry income both will come to the notes here. Sundry income will be charged inner column because it has adjustment 8 lakh, and add income receivable, it is 50,000. So total dividend receivable, sorry, sundry income receivable 8,50,000. So that's all the items. So to get a total of these total two item as a total other income is 18,50,000. That will be charged to profit and loss account. That's a 18,50,000. So we got a total revenue in this year is 2 crore 80,15,000. That's a first part of a profit and loss statement is over. The second part is expenses. So under expenses, the first item comes is the cost of material consumed, that we will prepare working note number 3. So let us prepare working note number 3 as a cost of material consumed. So let us find out in a question what items are there. It's a cost of material consumed. So we have already written here cost of material consumed, CMC, the opening stock of raw material. Then there is a purchase of raw material and a purchase return also there, that has to be adjusted. Then freight on raw material, it's a part of purchases, will be charged over there. CMC, that is a cost of material. We have already jotted down in front of this. Let us see, is there any adjustment? CMC, yes, there is a opening stock of raw material which will be taken care at the time of preparing CMC. So, and there is one more, raw material destroyed by fire will be subtracted from the purchases. That's why CMC. So these items will be taken care of. Let us do it. So opening stock of raw material will be taken care. Opening stock of finished goods will also taken care. The purchase of raw material will be taken care. Purchase return will be deducted from it, and freight on a purchase return will be taken. Then the freight on raw material will be taken there. And here the opening stock of. So let's see in the opening stock of raw material amount is 20,000. Then add purchase of material 54,000, 54 lakh. Add in a purchases, it has adjustment as a purchase return will be deducted 4 lakh. Then there is one more adjustment of purchase raw material destroyed by fire 30,000, which will be deducted from it. And there is a freight which will be added in a purchases of rupees 60,000. So the net purchases after deducting two items and adding one item in it, that comes to the 50,30,000. So the cost of material consumed is there is a closing stock available. After deducting it, it comes to net cost of material is 60,30,000, which will be charged in profit and loss account as a 60,30,000. The next item of expenses is a change in inventory. We'll prepare working note number 4. So let us prepare working note number 4, change in inventory of finished goods. Let us find out in a question what is a change in inventory CI. Opening stock of finished goods, and in adjustment there is a closing stock given of finished goods 12 lakh, that will be taken care of. So let us take these two items to the working note and charge here. opening stock of finished goods amount is 10 lakh and closing stock of finished goods is 12 lakh. So total is net decrease in inventories is 2 lakh. That will be taken care to the profit and loss account. That's a 2 lakh. So the next item to the profit and loss account which we normally charge is employee benefit expenses, and which we already recorded in the trial balance, EBE, that stands for employee benefit expenses. What is their salary and wages, bonus to employee? These are the two items belongs to the employee benefit expenses. Let us check, is there any EBE? No. In adjustment there is one employee benefit expenses, that is outstanding salary and wages. Let us transfer these items to working note. So let us go working note number 5. Employee benefit expenses, salary and wages is 8 lakh, which is outstanding salary has to be added. The total salary and wages is 9 lakh. And the next item is bonus to employee is 1 lakh 60,000. So the total employee benefit expenses comes 10 lakh 60,000, which will be charged to profit and loss account as a employee benefit expenses. Working note number 5 is 10 lakh 60,000. So the next item to the profit and loss account is a finance cost. Working note number 6. Let us prepare working note number 6 as a finance cost. Let's find out in a question what items belongs to the financial cost. Financial cost, FCFC, is here. Interest on loan from Bank of India. It's a financial charges. A financial cost goes to the profit and loss account. Let us see any further item in adjustment. No, there is no FC. That is a financial cost. So it goes to financial cost. Interest from loan from Bank of India, and it will charge there as a total 14 lakh will charge to finance cost. Working note number 6 as a 14 lakh. Next item which will charge to the profit and loss account as a depreciation and amortization. Working note number 7. Let us prepare working note number 7 as a depreciation and amortization expenses. Let us see in a question paper. The question says 3 items of depreciation on plant and machinery, furniture and fixture, and motor vehicle, that is 10 lakh, 6 lakh and 2 lakh. These will be transferred to the working note. Depreciation on plant and machinery 10 lakh, depreciation on furniture and fittings 6 lakh, depreciation on motor vehicle 2 lakh, and total depreciation and amortization expenses for this year is 18 lakh, which will be charged to profit and loss account. So profit and loss account working note number 7 amount is 18 lakh. The next item of a profit and loss account is other expenses. See the other expenses. We'll prepare working note number 8. Let us prepare working note number 8. Other expenses. Let us check what are the items available for other expenses. It starts from director's remuneration, repairs and maintenance expenses, insurance premium on office premises, electricity charges, rent and taxes, audit fees, advertisement expenses, and sundry expenses. And there is adjustment on a doubtful debt, that is a bad debts, and as well as prepaid advertisement expenses will be added, and provision. So let us do it one by one. So the first item is a director's remuneration goes to here. Director's remuneration amounted 16 lakh. Next item what we have is a repairs and maintenance 16 lakh, which will be recorded in working note. It comes here. Repairs and maintenance, it is 1 lakh 60,000. So next item of our question is insurance premium on office premises. Insurance premium on office premises, which will be charged in a note. Insurance premium is 60,000. After that, we have a next item as a electricity charges is 80,000, which will be taken care of here. Electricity charges 80,000. So after that, what we have rent, rates and taxes is 40,000. Rent rates and taxes. Rent rates and taxes 40,000 is recorded with the notes. Further, we have audit fees. Audit fee is also part of it. Other expenses. So we'll charge audit fee 1 lakh to the other expenses. Let us find out what is the next item there. Is administrative expenses, which comes here. Advertisement expenses 1 lakh. Let us find what the next is. Sundry expenses is and sundry expenses outstanding is there. So both will come here. Sundry expense, advertisement expenses and prepaid advertisement expenses total 2 lakh. Let's find out what is remaining there. Other expenses, yes, 50,000 provision for bad and doubtful debts, as well as raw material destroyed by fire. These are the two adjustments to be mentioned here in the sundry expenses 20,000, and the last one, raw material destroyed by fire, which was an insurance, hence 30,000 is total loss, goes to the other expenses in a note. So the next item, provision for doubtful debts, is 50,000 and loss by fire 30,000. In this manner, total expenditure, that is total other expenditure, is 23 lakh 40,000, which will be charged other expenses 23 lakh 40,000. With this, we have totaled this expenses, total expenses to the outer column. Total expenses comes 1 crore 24 lakh 30,000, and from it we will deduct the profit. We will deduct it from the total income. Revenue minus expenditure, you will get a profit before tax. It is 1 crore 24 lakh 40,000, and less provision for tax is given here. Adjustment, make a provision for income tax is 40,000 4 lakh, which will be charged to 4 lakh here, and you will reach to the net profit after tax after deducting 1 crore 24 lakh 4 lakh as a tax. You will get a net profit after tax is 90 lakh 20,000 is what your answer. If you prepare in this manner, you will get a full marks in your exam. I hope you understood how to deal the how to prepare a profit and loss account. Uh, Thank you for watching the video. Thank you.